Good morning. You're watching Business World Live. I'm Jes Delos Santos. It's the start of a new trading day, but first, let's go straight to our top story. Fitch Solutions has slashed its growth forecast for the Philippines to 5.8% from 7.6%, saying it expects more lockdown measures given the surge in new COVID-19 infections. The research unit of Fitch Solutions says the domestic economy is highly vulnerable to lockdowns due to its high reliance on consumption, and thus growth will likely fall again until restrictions are eased. Fitch Solutions says the country faces a rough road to economic recovery, noting that more restrictions will likely be required to arrest this spike in cases. Meanwhile, the Philippine Chamber of Commerce and Industry is again urging the government to fast track its vaccination drive. It's also calling on the government to expedite and, if possible, increase the amount of distribution of relief, or so-called ayuda, to residents affected by the enhanced community quarantine in the NCR Plus bubble. Now, the increase in consumer prices slowed in March for the first time in 6 months, with inflation settling at 4.5% for the month. That figure is less than the 4.9% inflation economists expected for March and the 4.7% print in February. The CPI print for March is quicker than the 2.5% inflation recorded a year ago, but still well within the 4.2 to 5% forecast by the BSP for the month. Still, BSP Governor Ben Jokno said a 4.5% inflation is in line with views that full-year rise in prices will exceed government targets. The BSP chief earlier cited lower prices of certain food items along with the downward adjustment in power rates and the implementation of price ceilings on meat products as the main drivers of downward price pressures for the month. But he also pointed out that a depreciation of the peso along with higher oil prices are likely to offset these factors and push inflation upwards. Despite this, Jokno said prevailing monetary setting is still appropriate to keep rising prices manageable. All right, let's have a quick check of how the market is doing after that March inflation cooling down again to 4.5%. As you can see here, the index is in the green, climbing by as much as half 8%, now at 6,528.10 over the past 3 days. The index, though, still down close to 0.2%. But again, circling back to our top story there, you have inflation for the month of March easing to 4.5%. That's lower than the Business World median estimate of 4.8%, and within the floor, at least near the floor of the BSP's target range of 4.2 to 5% for the month of March. That slowdown brought about by slower gains in food and drink prices. In his comments after those numbers were released, BSP Governor Ben Jokno did say that that the prevailing monetary settings are still appropriate and that March CPI gains is aligned with views that the 2021 CPI will actually exceed target. According to him as well, they are still watching for signs that inflation is becoming broader based here. He's saying as well that the recent virus surge is going to offset upward CPI pressures. Now, the central bank has maintained time and again that elevated levels of inflation is due to supply pressures, which it expects to subside by the second half of the year. The perception, of course, is that the BSP will maintain its accommodative accommodative stance. Let's try to get the insights of our guest on that later. That's going to be Security Bank Chief Economist Robert Dan Roces. Now, also, let's have a quick check here of our leaders and laggards after those inflation figures here. As you can see here, only 4 of the 30 members of the main index are in the red here. Majority of stocks still in the green here, headed, of course, by a number of consumer stocks here. Robinson's Retails, for one, is up by 2.2%, now at 56 pesos and 80 centavos a piece. Likewise, JG Summit also in the green here, climbing higher by 1.9%, now at 60 pesos a piece. Other, of course, consumer stocks here, Pure Gold also edging higher here, climbing 1.6%. URC also here, as you can see here, increasing by 1.4% 0.3%, as well as San Miguel now up by 1.3%. Now, of course, other developments here, other than inflation, you have, of course, day two of the extended ECQ here in the NCR plus bubble. But this time around, you have the palace. This is a development here. Malacanang is saying that there's a bleaker chance of an ECQ being extended beyond April 11. Top government spokesman Harry Roque said he doesn't think that a third week in ECQ is a possibility due to limited funds to assist affected residents. That amounts to 22.9 billion pesos. That's primarily leftover from Bayanihan 2. That covers a 1,000 peso dole out per person with a 4,000 peso cap per household. Yesterday, we did interview Marikina Representative Stella Kimbo, and she said that Congress will likely call for a special session for a supplemental budget. She also, in fact, proposes a more targeted household lockdown instead of extending the enhanced community quarantine in the NCR plus bubble. The DOH has said that the impact of the bubble will only be felt in 2 weeks' time. ECQ, of course, still in effect in the NCR plus in nearby provinces rather until April 11. But one economic manager is already casting doubts about the country's growth prospects. You have Finance Secretary Sonny Dominguez telling Bloomberg TV that growth for the first quarter and full year will likely be lower than expected. Full year, of course, you have the government targeting a 6.5 to 7.5% growth. Last month, you have NEDA Acting Secretary Carl Kendrick Chua expressing still bullishness, that such growth levels was still achievable, but Dominguez not really as optimistic. He also tells Bloomberg that the country plans to draw to a close its loans from the central bank this year or next year at least. Now, also part of the plan is to tap the U.S. bond market before rates skyrocket. Now, very quickly now, let's divert here to one development here over the Philippine Stock Exchange. You have here the PSE still managing to eke out gains here. Daily turnover climbed 64.6% to 10.99 billion pesos. This amid a continuous exodus of foreign investors over uncertainties in the country's vaccine rollout. Capital also raised from primary and secondary shares also ballooned by 116%. That's now at 41.6 billion pesos. Here are other headlines we're keeping our eyes on. Nearly 8,000 workers were displaced during the first week of the NCR Plus bubble. During a virtual briefing, the Labor Department said the estimate was made in the first few days of ECQ, which began on March 29. Prior to the reimposition of ECQ in NCR and 4 other areas, the department's tally for displaced workers was around 111,000. This means that the total displacement has jumped to over 118,000 by the end of March. DOLE is expecting that more Filipinos will lose their jobs this week as the government extended the ECQ bubble amid the rising cases of COVID-19 in the country. IHS Markit is flagging rising production costs in the manufacturing sector amid the continued growth of factory output in March. The country's March PMI grew at a slower pace at 52.2. The figure still stood better than the ASEAN PMI at 50.8. However, material shortages are supposedly causing higher costs for manufacturing firms. Nevertheless, IHS Markit economist Shreya Patel believes that a strong first quarter places the sector in a good position for a production growth rebound of as much as 7.1% expansion. For ING Bank's Nikki Mapa, the country's PMI reading going beyond 50 for 3 straight months shows that firms are looking to rebuild inventory. But Mapa warned that the renewed imposition of a stricter lockdown will have a negative impact on both demand and supply in the manufacturing sector. Circling back to our top story, again, inflation easing for the month of March. Does this mean the worst is over? To pick his brains, we have Security Bank Chief Economist Robert Dan Roces. Good morning, Sir Dan.
Morning, Jes. Nice to see you.
All right, sir. So, March inflation 4.5%. You forecasted 4.8%. That is going to be an uptick month on month and even year on year. This
right?
4.5%, was this a surprise? And what do you think did you overestimate for this month?
Well, yes, we were quite surprised with the numbers. I think, in a way, we overestimated the readings for food. No, we expected it to be elevated still, no? But we didn't see the impact of when vegetable prices started going down. The extent of that, and also the extent of um, fish prices. Now, when it began, um, you know, when the fishing ban was lifted, no, so that was one. No? But we expected pork still to remain elevated, which is one of the pressure points in terms of the food basket, no, and that actually remained so, no, for this for March. So yeah.
So I want to pick up on that point, the last one that you
Mm,
made about pork prices remaining elevated, especially for NCR.
mm,
We did see
right.
that in February somehow on a bit of a
Mm,
downtrend
mm-hmm.
last month, at least for February. But with the price cap ending this April 8th, what does this say about, or what does this elevated price still for the month of March say?
Yeah, well, first is that with the downtrend in terms of the vegetable basket and also fish, now that means prices there have started normalizing, given that probably the extent of the effect of the November storm has already dissipated in terms of vegetable supply. So that means uh, prices on that end are already normalizing. But if pork remains elevated, no, and like what you said, that the price cap will be lifted sometime this month or this week, no, that means there's going to push the food prices up again, no, given that there's no non-monetary control uh, for pork prices, no, and that could likely push back the inflation reading in the months ahead, no? Especially since we're dealing with unfavorable base effects as well. So, we still expect a breach of the upper target of the BSP's target range.
So this is not a mark of a downtrend, the start of a downtrend here, this March inflation reading.
Yeah, well, I think it might be still too early to tell. No? We also have to consider, how the ECQ is affecting consumption, given that uh, the current curbs could be manifesting the same um, price behavior that we saw last year when we had the stricter ECQs. No? So that remains to be seen. No? So I guess it's still too early to tell if this is the start of a downtrend already.
Mhm. Now, question is, of course, much of what the BSP has been monitoring is if there are
Mm-hmm.
spillover effects.
Mm-hmm.
How have we averted that in essence? At the same time, much of the consensus is that, this is pretty much driven by supply pressures and that's expected to subside in the
Mm-hmm.
second half.
Mm-hmm.
Is this still the case now?
Well, yes, no, that has always been the base case. No, supply side pressures could dissipate when once all the other volatile components start exhibiting normalization. No, but the other thing that we have to contend with, no, is demand pull at the same time because once if we reopen the economy, no, and growth or rebound starts to manifest itself, we can be sure that there's going to be some better demand conditions going on. So that could lead to another inflationary event, but this time uh, something that we call, quote unquote, the good kind of inflation, no, the demand pull inflation,
Mhm.
and that's a hallmark of some rebound in terms of household consumption.
Now, one
Yeah.
interesting thing before broadcast here, we did see a
Mm.
comment from BSP Governor Ben Jokno. He did say that
Mm.
virus surge is going to offset upward CPI pressures. How do you make sense of that?
Virus surge going to I'm sorry,
Offset
what was the question?
upward pressures in
To
CPI.
offset the yeah, well, I think what they really mean is consumption will slow down, something that we saw last year with the ECQ, no, people will be clustering or purchases will be clustered towards the more essential goods once again. At least that's the theory. They will likely dispense once again with the non-essential stuff. So that could mean that it's going to offset some kind of inflationary pressure from some other basket. So it could potentially slow down inflation, but that also means that consumption will be going down, and with consumption being around 70% of the GDP, that means there's going to be a slowdown of the GDP as well.
But of course, much remains to be seen whether or not this lockdown will be extended, given, of course, the surge in cases. Thank you very much for your time this morning, Security Bank Chief Economist Robert Dan Roces. Thank you, sir.
Thank you, Jess.
And that's a first look into the business day this Tuesday, April 6, 2021. Catch Business World Live for the market close at 3:15 p.m. today. I'm Jes Delos Santos. We are One News. Mask on, wash hands, and stay safe, Philippines.